face.
Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. Before we kick it off with a recap of the overall markets, the S&P 500, I am going to mind my manners and welcome you if this is your very first time. If this is your very first time tuning in, your very first time listening to a ShortMeTina video, do us a favor, do us a solid in the comment section. Comment and let us know that this is your very first time and let me know your name. I like to call folks by their names. I like to personalize things. That's the first thing. If you don't want to say hi, you don't want to tell me your name, you can let me know whether or not you agree or disagree with the analysis that you're going to see going forward, right? So even if you have something bad to say, guess what? It's going to just fly over my head. I'll take note of it. It's going to fly over my head. Why? Not because I don't care about what you think, but because I am in a really good mood today. I do not know why. It could be the springtime weather. There's just something about the month of April, and that's fresh spring air that just gets my blood flowing, my juices going. So I wanted to get that out the way. Now, I'm never ever gonna forget the folks that are my ride or dies, right? So for the folks, if this is not your first time tuning in and you're with me every single day or every other day or whenever you have some free time and you're returning time and time again to my YouTube videos and you are subscribed, that's important, and you are subscribed, I want to say from the bottom of my heart, you guys have absolutely no idea how much I appreciate, and I'm taking note of that vote of confidence. Our mission here, and I'm going to stand firm and true to this, is that for anyone who wants to elevate their trading, if you want to become a better trader, I am going to do my best with your help to get you to that next level. It's been a long journey and a long road for me, but I've learned so many things along the way, like I've indicated for those that are not new. And for those that are new, I've been trading for over 15 years and I've learned tons of stuff. Do not make the same mistakes that I've made. Learn from me. That's why I'm here. So wanted to get that out the way. So we're going to kick it off as usual with the overall market, the S&P 500. The SPY right now, what you're looking at is a daily chart dating back to 2017. We closed at 292.21. Some slight movements, but overall still very flat for the market for the past few days. And that's okay, right? I'm okay with flat after such a huge 25% move. So like I've indicated before, the SPY has been trading within a range dating back to 2017. We have finally gotten out of that range. And so again, so we can identify that range as 280 to 282, this line right here. As long as we can stay above that, things should be good. At some point, I'm going to expect the market to retest highs. And that's where we really need to pay attention. We want to pay attention to value, and we want to pay attention how investors react once it gets to that price point. So for the SPY, that level is 293.94. All right. So ingrain that in your head, 293.94. Today we went as high as 293. What was that? 293.16. Yesterday 293.14. So if we ever get to 294, pay attention to volume. See whether or not a whole bunch of sellers come in, smack the SPY down, or if you have folks jumping in to bid the price up. So that's what I'm going to be paying attention to. What else? And then we have the IWM small cap daily chart dating back to 2017, but I want to focus in on price action around here, October of 2018. Again, resistance, which is this blue line here, comes in at around 158 to 160. What I mean by resistance, generally speaking, when a stock gets to resistance, you can look at that as a wall. Sellers come in and knock the price of the stock down, or in this case, the ETF. So right now, 158 to 160 is that level where sellers generally come in and knock the price of the stock down. And it's also a hard level for us to penetrate with the IWM. So today we closed at 158.02, so we're kind of smack dead right there at the lower end of resistance, this resistance range that I've identified here. And again, if you go back to October of 2018, we have not traded above 160 since then. So to actually get above would be a good thing from my point of view. So in the case of the IWM, I am paying attention to whether or not we can get above 160. If we can do that, more than likely we will retest all-time highs. What else? And then we have Tesla, ticker TSLA daily chart dating back to 2017. And this is precisely why I stress, in terms of trading, you never want to chase. Whatever that price, but like say for example, you want to get in a particular stock, identify yourself a price point. Say to yourself like, look, I like this stock. but I'm only going to get it if it gets to that price point, and just wait it out. I think even doing something as simple as that will, you'll see, in my opinion, just better results overall with your trading if you have sort of like the patience and the disciplines to just wait things out. And I think for me, one of the reasons that I've managed to go from unprofitable to break even to now consistently profitable is because I am very patient. And I'll show you a couple of trades that we actually got into that we did well with. I'm not sure how many I have. Maybe I only have one, where we actually remain patient to get in the trade, and it's actually worked out for us. And I'm gonna stop using the word actually. So let me get back to Tesla. So it's a daily chart going back to 2017, and I did several videos on Tesla. I've been overall intermediate and a longer term bull, but in my opinion, support comes in at around 240 to 250. So if you want to trade Tesla, I wouldn't jump in at 259. It went as low as 255 today. How I typically, actually, that's a mistake. It went as low as 251 today. And how I tend to trade, 251, technically speaking, would be too rich for me because I want the stock at 240 to 250. And I'm putting it on my watch. It doesn't necessarily mean I'm going to jump in when it gets there. I have to look at other factors. But put the stock on your radar. Like I said before, I am in the intermediate and longer term bullish on Tesla. And if support holds, and it's held since 2017, so we have about 2 years worth of support holding. If it holds and you actually get in at the lower end, around 240 to 250, and you actually ride it up to the top, you're looking at a gain of about anywhere from 100 to 150 points, or $100 to $150 for every share owned. If that's not a reason to kind of hold out until it gets support, I'm not sure what is. So sitting here at 259, sitting here at 259, we went as low as 251, and that tells you that that is a level of support because buyers came in and they drove the price of the stock up. So for me, I'm just waiting until it gets to 240 to 250, and at that point I'll think about whether or not I want to get in. Put Tesla on your radar. What else? And then we have Snap daily chart closed at 1126, and in typical fashion, this blue line, we can call that resistance, is resistance because the stock got there today, we went as high as 1242. We can say resistance comes in at around 1250. We tried to penetrate it here earlier in the month. We went as high as 1263. So we penetrated a little bit, couldn't sustain that move. We came back down. We tried it once again, tried to penetrate that resistance level of around 250. Didn't quite get there, got as high as 242. Stock got smacked back down, closed at 1126. The low of today comes in at 1106. I think the selling will continue at some point for Snap, and like I've indicated before, the likely scenario is we will fill this gap here of around 1006. There's a second gap to be filled at around 705. Can it get there? Absolutely. Do I think it's going to get there? Probably not, unless the overall markets turn, because for it to go back to 705, I mean, that's a pretty steep haircut from 1126. I haven't done the percentage. You can do it, but it seems as though it'd be, if I can take just a stab at it, it'll probably be like a sell-off of about 30%. I think it would take a lot for the stock to just shed 30% all of a sudden. So for me, I'm thinking the more likely scenario is that gap gets filled at around 1004. At that point, I might deploy some cash. I am long, ticker SNAP. I am bullish in the longer term. What else? And then we have ticker ZNGA daily chart. Full disclosure, we did go long, and going back to this whole notion of being patient with your entries, I think we actually waited a few weeks, if not a few months, to get our buy zone triggered on ticker ZNGA, and it worked out for us, right? So we got our buy zone triggered. We ended up getting into the stock anywhere from the low to mid threes, and sitting here at 558, we're up well over 60% on this particular trade, and I like it longer term. I know the stock reports earnings within the next few weeks, so be mindful of that if you're thinking of entering this trade. But I've maintained that I have a $6 price target on ticker ZNGA, and from our buy zone of low to mid threes, again, we're looking at profits of upwards or north of, I think it's, what would that be, 70 to 80% huge winner. And we didn't just jump into the stock. It took us a while to actually, like I stated before, it took us a while for our buy zone to be triggered. But in this example, it shows why being patient pays off. So for Zynga, above resistance, broke out of this multi-year channel, sitting here at 558. $6 is in the cards for me. What else? And then we have Apron, Blue Apron rather, ticker APRN. Daily chart up about 2% on the day, closed at $99. So for the past few days, and I've stated before, like as long as it can stay at $1 within that range, things should be good. And so far, like it's, as you can see, whoever's in this stock or whoever's in this trade, they're making it their duty to ensure that this stock does not fall too far below $1. So it reinforces to me that $1 is sort of that pivot point. Anything above there, if it can stay above there, you have to be bullish. If it dips below there, you have to be bearish. And sitting here at 99, granted, we're under $1. But again, with trading, things are more so like an approximation versus like exact figures. So when I say $1, I'm talking about that range. So obviously, if it gets to 80 cents, we're out of that range. But if it's at like 97, 98, 99, it is within that dollar range. $1, $1, $2. Etc., etc. So for Blue Apron, I'm not in this trade, but as long as it can stay above $1, I'm inclined to be bullish. What else? And then Disney daily chart dating back to 2017. I haven't done a video on Disney in a while, but again, full disclaimer, full disclosure, we went long Disney in the premium member community, sitting here at 135.10. We ended up getting into this trade in the lower 100s, experienced this gap up, and after the stock gapped up, I released this trade idea to my newsletter subscribers, to the general public, and I said, well, I see Disney at 150. It took a while for it to get going, but it seems as though it's getting going. I don't know, whatever. You get my point. It seems as though things are gearing up. Obviously, it geared up with this gap up. That was a huge move. But even so, it still seems to be etching out more and more gains as the days progress. Today we went as high as 135.75. I'm not quite sure what's going to get it to 150, but based on the chart, based on price action, I'm still inclined to be bullish on ticker DIS. So put it on your radar. It's not just a trade for me. I think Disney is a longer term investment as well. So hence why I still hold shares in my longer term portfolio. What else? And then we have Boeing, ticker BA daily chart, another stock that's sort of hanging out within sort of that resistance. So it's at some moments it trades under, then it trades over. We closed at 37. Where am I getting these numbers from? We closed at 375.46 today. So essentially flat on the day. So for ticker BA, we're like literally hanging around that support area, in my opinion. And it's quite interesting that it hasn't really moved as of yet. So based on a risk reward profile, it would be okay, in my opinion, relatively safe to enter here. I personally wouldn't enter here because, again, I don't like the fact that it's been hanging out in this area for too long. For me, anything can happen at that point. Investors seems to be a bit, investors or traders seems to be indecisive because, again, we keep gravitating to this same area without any sort of real confirmation of whether or not they want it to be above or below. So I will let things play out a little bit more before I jump into ticker BA if I would ever take this trade. But that's another story. What else? And then we have ticker JD. So you should know unless you're new. If you're new, then you don't know. But if you've been with me for a while, you'll know that I'm bullish on ticker JD. You'll know that we actually went long this stock when it was trading at around $19 or $20 in the premium member community. We've stalled out a little bit here. We can say for the past few days. For the past few days, we've stalled out here. But even sitting here at 29.66, I think the stock, once again, is just digesting this huge move, which I think it's great. Anytime you see a stock rally like this, you want to have pullbacks, you want to have your periods of consolidation. Again, how I sort of rationalize that is that the stock is digesting that move, right? Because if a stock just continues to go up, moves like that are not sustainable. You usually get a really big crash. But in situations like this where you have a large move up, some periods of consolidation, the odds of it actually going higher and sustaining that higher move increases. So anytime you see a stock of yours, and you can see this really highlighted in penny stocks or stocks that gap up and have like these huge moves in 2 to 3 days. What generally happens the subsequent days, right? You'll have that large collapse. So anytime your stock is in an uptrend, you want it to kind of like stair step, to do it very smoothly. Because again, for me, the odds of it sustaining that move increases when I see moves like this and the subsequent pullback and consolidation. So I say all that to say, sitting here 29.66, I remain bullish on ticker JD. Nothing has happened for me to turn otherwise. What else do we have? And so let's wrap it up and round it out with ticker KO daily chart. I want to pay attention or focus in on price action after the stock gap down. So we took this trade in the premium member community. We actually closed it out either yesterday or the day before, right before earnings, not because we were underwater with the trade. Actually, we're up about 8 or 9% on the trade. Not 9, I think it was like 8%, depending on your level of entry. We're up about 8% on the trade. But for me, that wasn't, and I guess this might be a lesson in whether or not to trade earnings, and that's perfectly fine. Not as an investor, but as a trader. And as an investor, like for example, I'm longer term Snap, I held through earnings. But for Coca-Cola, this was a trade on many levels. And I didn't want to hold through earnings because again, with earnings, things can be a hit and miss. You don't know. And I wanted to lock in that 8% profit. So I'm saying that to say you can put this on your radar, on your watch list for two reasons. One, it's a boring stock. I'll tell you right now off the bat, come on, Coca-Cola. It's a boring stock unless we find out that they're partnering with some sort of marijuana company. You might get a big push outside of that. Slow moving stock, despite us getting 8% in like 2 or 3 weeks. But this is a stock that we actually held out to get in. It took us a while to get our fill. But once we were able to get our fill, it was kind of uphill from there. I don't think at any point we were actually underwater with this trade. So put this on your watch list for two reasons. One, there's a gap here to be filled at 49. So sitting here at 47.98, there's still potential upside. That's one. And two, the reason that we actually got into this trade, or I wanted to put this trade on, it's because it's a defensive stock. And if the markets for any reason decide that it doesn't want to go up anymore and it wants to start to act funky and decline, stocks like this, these defensive stocks, tend to perform well. So anytime the market is experiencing any sort of correction, you want to have defensive stocks in your portfolio. And one of those defensive stocks that I particularly like is Coca-Cola. So those would be the two reasons for you to put it on your watch list and your radar. One, in case the market pulls back, because we are close to all-time highs. This will offer you some protection. And two, because there's a gap here to be filled and it's been in an uptrend since this gap down. It looks like it wants to fill that gap. All right, so this disclaimer, I'm not sure if I stated it. We did take this trade in the premium member community, but we're out. At some point, we're going to get back in. So we're going to cap it there. Tina, once again, from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Do you agree with my analysis? Disagree? What do you think about Coca-Cola as a defensive stock? Are you looking to get into Tesla, Snap, Zynga, Apron, Disney, Boeing, JD, any of the stocks that I mentioned? Are you in? Looking to get in? Comment in the comment section. Let's have a dialogue. Let's learn from each other. I've been trading for 15 years, but I can still learn from everyone or anyone. I never say to myself, well, there's nothing you can learn in the market. Absolutely not. Every single day I learn something new. That's the first thing. Second thing is, if you want to hear more videos like this, then head on over to our YouTube channel at ShortMeTina. Hit that subscribe button, turn on notifications. I do videos Monday, Tuesday, Wednesday, Thursday, and Friday. Every day the stock market is open, you can expect to hear a video from me. Even yesterday, when I did not have a decent mic and I sounded really jacked up, I still did a video for you folks because I love you so much. I really do. Generally speaking, I love you. I love you so much, and I'm going to put that I love you. And I'm just in such a good mood today. And lastly, if you want more value, think you can learn anything from this stock market veteran, like I've indicated numerous times in this video, I've been trading for over 15 years, then you can head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always,
vision, dreams of passion, and all the while I think of you. very strange reaction. The more I see, the more I do. Something like a phenomenon, baby. Telling your body to come